Okay, good morning, guys. Sorry I'm a bit late on today. Uh, Welcome to the Trade Setup and the live stream for the 25th of October. Okay, we've got a few things we'll go through today. Look at a few charts, look at the markets, the overall markets, and then just we'll see how it all goes, see where the market's opening at the moment. Okay, let's get started. We'll get into it. Let me just get up a few things here. Make it a bit clearer. Okay. So the as normal, just if you've got any questions, type them into chat there. We're slowly getting things organised with the streaming, and if anything is not working that you can see that stands out, just let me know, and we'll work on getting it sorted out. So any charts that you want to send through, send it through to support at tradesetup.com.au. And then we'll go through those, even if it's a trade that you've actually taken that you're questioning whether it worked out or whether it didn't, and you just want to discuss it a bit further. It's always good for a third opinion. I find that always helps. Sometimes you get stuck in a bit of a rut and you can't understand why something's happening. Another set of eyes can always help, just a different opinion on the overall structure or the market structure or what your views are. Obviously, all these talks are based around technicals rather than fundamentals. Personally, I'm a big technical fan. I like trading the technicals. I think they show up a lot of the fundamentals anyway. And then we just got, obviously everyone's got a different trading style, so trying to work in your trading style with what we're talking about. Okay, so yeah, if there's something you want to put through onto chat, just a stock that you want to have a look at, a bit of a discussion, and what your views might be, what sort of levels you are seeing as important, feel free to whack it up there. All right, let's get into it. So the market at the moment is up 30 points. That's quite strong. I guess it's good after what we saw yesterday. The markets didn't move too much on Friday, and we got sold off quite hard yesterday. Now they were up a bit yesterday, more the US than anything else. I think we had a mixed bag in Europe. DAX was up, FTSE was down. I think the Euro Stoxx was actually positive, so I think overall Europe was up. Excuse me, just getting into my coffee. Yeah, so not surprised with a 30 point up move up today. At the moment, that's on the open anyway. We'll see how that goes into the close, but we had a good push down yesterday. We'll go through that in a second. Actually, we'll look at that now. Might as well get into it. Let's just get rid of that. So, um, just as a side, guys, just this is what we do all the time, and I think it's a good habit to get into, is just marking up your levels on your chart. You know, whether it's the AS, I mean, I do this on the ASX purely because my background's intraday trading on the SPY and things like that. So it's always good just to mark up the levels, the key zones that you're looking for. But even if you get in the habit on it, just charting it up on a daily basis, even, and then that gets you in the habit of just looking for certain areas, looking for certain setups, and just marking them day after day after day. It's always good just to get into a habit of doing that and trying to pick out key levels, and then the next day maybe looking at just reviewing it just to see, okay, did the market react off those levels? You know, for instance, we marked up this level well in advance. We saw some good reactions. So you want to see whether you're consistently getting those levels correct, whether you're picking out some random levels which are not really, you know, there's no reaction or action or reaction at those levels. But I think it's a good habit just to get into, just to get in that process, and it's good just to follow it up too, just to see how you go, and just to maybe you can delete some levels out that really are worthless, or some that are actually showing that there is going to be reaction there. So yeah, looking at this, we've got our key levels up here. That's, if you drill it right back, so we've got this move down. We've got a lower low, a lower high up here, pushed back down. So as soon as it breaks this level, that's a key anchor for the trend down. Until that's broken, you know, if we push down and then we've got to wash back out up at this level before that trend down's broken, but it held. And then what you're looking for, you know, once you get extended, you get this sort of, if we can draw that in, this, that's not really any good, is it? This sort of moved here, then you're just really looking to see, you know, picking a level. If that's a lower high, you're trying to pick a level where it comes into, which it did pretty much to a T. And then, you know, if you extend it into that sort of zone there, you know that you're probably expecting a bit of reaction up, and then from there you're looking for, you know, contraction back up, and we're looking for potential another lower high below that 58,480, and we got that move down. So if you can just sort of take, I use that, it's called volatility projection, just to find out, as you're coming down, if that is a lower high, as we're trading that move down, we want to see where potentially it could go to. That coincided with a major level at 53.78. If we can just go back. Anyway, so that pretty much there. If you're so close, you expect an extension just into that level there, because it's a key level. So what we got at that point in time, we got our key anchor holding that trend down was up here at 54.63. Now we did get a good move up, which is it's always good to see actually when you see that sort of a deeper towards the anchor, a deeper pullback towards the anchor. It's a good sign that there's more buyers stepping with a bit more strength. So I'm always happy to see that. Then you got a bit of a washout, spike up. We had another spike there, spike up. That high started to hold at 54.54. I think that was overnight, and then we started washing out pretty much that key zone. So what you're looking for, the market's contracting up. You're just picking levels on the upside. You're coming into a key level on the upside. Support, you're looking for key sort of zones for support, and at the end it was this one here at 54.32. Contraction, spike below that, retested the highs, and then we started washing out. So the thing of what we've done now is that now that's a key level at 54.54, pushed down into lows at 53.78, washed that out, and then we bounced straight back off that. And it was only really today that this sort of move down is failing. So that is a good price action. A big strong move down and push back up into the close overnight. We got that. We tried to go lower, only got as low as 54.08, and then pushed up into the close, and that was in oversold conditions. So you can look at where the price is. We got right down here in oversold conditions, and then we got oversold again. You can see, but that move down wasn't strong. It's just a good sign that buyers are happy to step in. Got a major double bottom there. You've got your washout. So there's a few key factors that we like to see that are really working out. So in saying all that, good. Well, I don't want that. Good strong price action on the open. We've sort of taken out. We mentioned this as a key level 54.25. Now if that breaks, it did push up there on the open. Sorry, and then it's just recently broken through that. And then in the second half hour bar, so we've got through that now. Potentially going up to 54.54, maybe wash that out, retest it, but I'd expect that to hold today. Considering we're up 30, it's hard just to get through that, a good strong pullback and then go again, and then really be extended on the day, considering we haven't had a big lead from the US. So it's always important just to take note of these sorts of levels. Don't jump in and sell, obviously, there, but just be wary that we could get a bit of reaction off that level. And of course, we do get spikes through all the time. But you're always looking for that. If you get that washout through, look for a lower high and potentially for an intraday trade. But again, we're overboard as well. So I think longer term, that structure is looking quite good. If we go to the actual ASX, let's just look at that and see how that's playing out. You can see on a daily basis, if we can drill that down, you've got this low here, lower high, and that spike lower yesterday, and we held that low. Really, we washed it out, which is great, and we've pretty much come down to 53.72. A few points off this sort of minor level here, but that's nice price action. When you reject it like that, you wash it out the lows. People are going to be sell stops or whatever they've got under that level. That's going to happen, and then potentially if they're trading it that way, sell on stop, they're going to have a bit of a buy exit up here, and we could potentially be targeting that. So it just means that you've washed them out, you put them on the sidelines ready to go. Other traders are on the sidelines, and if it goes up there, it may be anticipation this overall uptrend is holding, and we're in oversold territory, so we're not in a bad zone there either. And the longer term trend is obviously still higher, so this could just be inside continuation pattern. Contraction, we made a major higher low, so it made a higher high here, pull back, made a major higher low, potentially continuing that trend. Now I'd expect if we get through that, even this minor level, more up at this level here, highs at 5,500, get through that, then we're looking to really target that 5,600 and really have a good crack at that level to take out those highs. And I would even go so far as to say that take out this high here, say 54.60, give or take a few points there. If we take that out, that's a good inside continuation pattern also. And then if you are trading off, even if these daily bars here, you've got your risk is under here. After seeing a washout, you're breaking back up again. You've got a lot of longer term traders will start stepping back in. Weekly trend is up. We'll see how that goes anyway. But yeah, there's a bit of it potentially could be a bit of emphasis. I thought there might have been a deeper correction, but that price action is sort of telltale signs of, or early signs of it actually pushing higher. Any questions there, guys? If you've got anything just on the ASX to quickly have a look at. Yeah, again, just feel free to send through charts if you want to support at tradesetup.com.au. Now, one that I just want to go through a quick point on, and I noticed it when I sent out an alert this morning on WBC Westpac. Just sort of something to think of. See, okay, sorry, just got a couple of questions through. Yep, okay. Paul, I'll look at TLS. We'll have a quick look at that. Whether or not that plays out, we'll see how that goes. And CWY. Spot this at 110. I'll have a quick look and see if we can get over those today. All right, quickly WBC. Now, I've just sort of forgotten what I was going to say here. I like just different points just to take note of. I like this one here. Look, if we can draw that on the longer term basis, if we can just get our little tool up again. I was looking at this today and oh, that's right, just discussing about potential interest rates and things like that. I think I was talking to someone the other day about banks, and they said, oh yeah, as long as we you know, interest rates are going to constrain it and things like that. The thing is, as a pure fundamental view, I agree. You know, it is constrained with lower interest rates. You know, the banks are obviously, the profit's not as high, profit margins and things like that. But my view is you've got to look ahead of the time, and if you're trading, you can't just sit there and say, okay, as long as once we see interest rates rise, then people will be stepping back into banks. I think people are stepping back into banks already. They're not going to be waiting until the interest rates rise, because that's pretty much the known. You know, fundamentally, it's a known. Once they start raising rates, we know that banks are going to be doing better again, and they're going to start performing again. But technically, this to me doesn't look too bad at all. I was just having a quick look at that. We've been watching this for a while. You're getting a major support zone here just below 27, and then we've got that sort of touchdown at say 27.50, double bottom down there. Now technically nothing's confirmed. You're still getting lower lows, but if you can see, we're really pushing down into that zone. And the first real sign what we're getting, we've been watching this level here just to see if that didn't go quite well, just to see if that is a higher low in here, and that's looking like it's going to be the case, and we're getting some good signs now that it's pushing up, and then obviously you'd be targeting up towards this level. Now if that breaks, that sort of can easily break down that contraction level. Even if you're taking the level down here, we're sort of breaking it already, broken it already. Technically that's starting to look pretty good in my view, and I do like that if we can draw that in a bit better, that sort of rounding base. I like seeing that type of thing when you get the, you know, lower lows, these lows start holding and you produce a higher low. Obviously we're still contracting because we've still got lower highs. As soon as you get that first lower high broken, that's really got to start bringing in some buyers, I think, and you really got to start grabbing your attention. Now this is a weekly chart, so that's a good long-term base there, I'd say. Cancel. If we just go, let's just go to weekly, daily, just to drill down on that action. So you can see that longer term double, we've got a double base down there, double bottom, whatever you want to call it, the high low building, and we're starting at that type of curving price action there. Now I was happy just to buy it through that, which is just open above down there. So essentially we're happy to be long around these levels, and we're looking to target this little high. I think it's going to get through that, say 31. I think it's going to do it today actually. Could be a good day on the ASX, and then that's sort of front running the break of 31.30. Okay, so really we can see that overall longer term structure is looking good. It's holding up major support here. We built that major high low, and that's confirmed once we got through this level here. Actually, let's just draw it up. Might be a bit easier. So on a daily basis, we like that because remembering the weekly charts, we've got your major bottom here, got a higher low just in here, and then once we started, and then right up until that point, anything could have happened. It could have just kept rolling over. This is sort of, it's not pointless, it's not meaningless, it's something really to focus on. A double bottom, you've got the major contraction on the weekly, so we're looking for contraction to expansion. Where we're going to get that, we've got a, okay, here we've got a bit of a breakout, but it's just coming off a double bottom. That's pretty aggressive if you're trying to buy in there, and then your stops would have to be down here, just with that break above that level. But as soon as we get that rollover and build a higher low, okay, on a weekly basis, that's good. That's a good sign that the weekly is going to have to contract. If it wants to go down, it has to contract a bit higher, put some buyers back on the sidelines, wash them out, and then roll over again. But by then, hopefully, we've booked a profit, even if that happens. So what we're looking at here, we've got that break of that level up through here. We built a higher low, higher high, higher low, and then we're happy just to sort of buy through this region as preempting that we're going to break that. And then on the longer term structure, what we've got, well, we'll take that off. What we've got is that curving bottom to break through this level off this major higher low on a weekly basis. So weekly, with this in mind, this high low, we're looking to push through that level. 31.30 I think it was on a weekly basis, potentially targeting up here, even even some higher levels. There could be quite a bit to go because the weekly, obviously there's a lot of strength behind a weekly chart. Okay, let's look at firstly we'll go over, oh, that's not what I want to do. Let's see, CWY, that's not what I wanted to do. I don't know where that happens. Too extended from a technical point of view. Yep. Pretty much no doubt on that. What was interesting though is to see there's obviously a fair bit of strength in that. I don't know. Cleanaway Waste Management Limited. Okay, let's go back to the weekly just to get an idea. Alright. So you're coming up, yeah. Just quickly looking at that daily, you'd say that's overextended. You've had a good base here, you had a good solid push up. Okay, that's great. Some good solid consolidation. Seen that consolidation is quite nice after that strong move. Maybe you expect a deeper pullback, even a retest down here, but the fact that it's just consolidated and made a low here, you expect it to roll over and make a lower low. It didn't. It made a higher low. That's a good sign. So technically, yeah, I wouldn't buy it here personally, because we are getting overbought. That structure, one push up, build a base, have another push up. We don't know if that's going to go, and potentially you can project that sort of move up from here, and you're getting into it up towards say 127. So there's not a lot left in that move, from my view anyway. The way I would look at it. But then if you flick back a chart, you're coming into this level, highs of 123. You're sort of just touching above that now, and then you've got again back here, high 133. So yeah, in saying all that, there could easily be capped there, and you extend it on the weekly too. So that's the fact that you extend it on the daily and the weekly, you're up into overbought territory. To get people in, it's got to wash some buyers out. This is the way I view it. So when you start getting extended like that and the price is coming up into a key level, you're better off erring on the side of caution more than anything else than just buying it thinking it's going to go high. Because then if you want to buy it, okay, great idea. It is weekly. It's a nice little base there, and daily, you've had a base build, a lower high. For me personally, if I was going to buy that, considering it's overbought on a daily and a weekly, you can't just have your stop below here. I mean, you'd want to be putting it all the way back down here, just to trade technically, I think, off this level, basing your risk off that level, because it is a high low on that weekly basis here, if that makes sense. Only minor, but it's made a low here. You pushed up, taken out a few highs, rolled back over, headed down towards test. It made that high low on a weekly. So weekly, if you're buying it here, it's just you've got to hold your risk way down, and for me that's too far. Now, in saying all that, if you're happy to do that, great, but I'm personally not. I wouldn't base my risk here because it's extended. I want to see a bit of contraction, so I think this could, a bit of contraction lower considering the weekly charts, and then building a major base, and then trying to get in early on these types of moves. If you can get in, it's pushed down, it's building a higher low in here, just getting in with the idea that that move just in here could lead to a push through that high, continuing this overall trend, and then you don't know where it's going to go, obviously, but you've got the supporting structure that you've built up your picture, and just sort of trading it from there. 117 stop loss at 110. Yeah, so that, I guess that goes back to just being extended both on a daily and a weekly. If you're bought on a pullback there, I'm not a big fan just buying on pullbacks purely because you don't know how far it's going to pull back. It could go straight through your entry and your stop all in one hit just by a big retracement, considering that's overbought. So right, Telstra. Chat about the Telstra. What was it in particular, Paul, that you were looking at? Just the reasoning behind the short? What I guess starting from the monthly, you can see it, it's had a big run up. We're just going way back, just taking into account all the data. Had that big run up, obviously 99 did really well. Corrected all the way back down again. It took years, obviously, or 10 years to be exact, 11 years, all the way back down towards 250, and then we've had a good run up on the monthly basis without stopping. Pretty much, for the next 4, 5, 6 years, made this high at 675 thereabouts. Made a minor lower high, we pushed down. Okay, that's not too concerning. Push back up. It could have easily gone up from here. We tried, and it looks like potentially we're just going to take that is a major monthly lower high. Okay, so that. Oh, how do you short sell? Yeah. Okay, we'll get to that. On stocks, no. CFDs, you'd have to be using your CFDs. All right, so if that's a major lower high, in respect to this, it doesn't. All's we're sort of assuming that there's going to be a correction. If it's a correction, this uptrend here, okay, that's good. Everything goes up, corrects, goes again for the next leg up. At the moment, we're in correction mode by the looks of it on a monthly chart. So that really is just anticipating a breakdown of the $5. And we're trying to just minimize our risk with the lower charts. If you go to a weekly, you get a bit more information there. So remembering that's a monthly move up. Maybe we're correcting. We don't know, to retest back down to 4. Who knows? But because it's a monthly chart and a weekly chart, there's a lot of fat in that trade potentially. Yeah, 508 today. Pretty much when I sent the alert yesterday, it went up. It doesn't mean that the trade's still not invalid, if that makes sense. It's just it hasn't activated. There's another thing with, if you're watching the alerts, for people that watch them, we'll give to. I'll bring the chart up in a second. Actually, I'll just get it up now and just show you what I mean. Just especially with these entries and exits, just so there's no confusion. Okay, so that was the alert there yesterday. The key levels, obviously, we want to see a breakdown of 499. If we through there, we're sort of anticipating a run through of this, these lows. I don't know exactly what they are, but say 490, 494. We're anticipating a push down below that, because that is starting to get good confirmation of a rollover. Because as soon as we get that push down below 499, that's confirming that that's a weekly lower high. This is another inside lower high at 515. And then we go. So once we're entered, then we've got our risk at 515. Now, if that level gets taken out first, we don't get a push through 5 or 499, and we get it trading back up through 515, we might have to reconsider that trade. Okay, so that's the reasoning, just to keep an eye on those levels. But remembering that we're looking, the idea is on a weekly basis, we're looking for potential more contraction, and this could easily wash straight out these lows here. A few stops are going off. Anyone that's bought it, that's trying to anticipate a push back up, got it wrong. We don't know if we've got it right yet, but we don't know how far it's going to go. But then it's just risk management from there. So the idea of the trades behind it, we know what we're looking for, and it's just a matter of managing that trade to see if it actually works out. Now, if it doesn't, okay, so be it. We go on again, like we did with Qantas. We had the short. It didn't quite work out to what we expected. So as soon as things don't start working out, it just raises flags. You've got to raise your flag, red flag in your head, and just think, oh, that's not working out to what I expect. Why not? And analyze it again. If it still looks good, okay, either tighten your risk up or just let it go. But then when things just, after some time, there's a certain amount of time, if they don't work out, then you've just got to look at protecting yourself. That's what it comes down to now. If you have an idea that should move fast and it doesn't, just question either your hypothesis for getting in and how to protect yourself. So on a daily basis, like I said, if that pops up through 515, This could have just been a washout. Now we're starting to hold 5. We push up through 515. Essentially, you think it's going to head back up towards 520, test that, even break out there, and we just get a contraction. So we may have, roll over quite hard. I'm expecting that to push through, but if not, if we just get that contraction back up, we'll probably take out that 520 and contract. Doesn't mean the overall trade premise is maybe we need a deeper contraction, a deeper pullback before we enter short, if that makes sense. So really, this trade is still on up until 515 is broken, or that level. Back in March. Yeah, well, it does, and that's what obviously you got to take note of, like you said before, just remembering what's happened in the past, and it could just be this exact same thing. But it also could be it could be a bit of this. We get this move down, we're expecting a breakdown, then we just get contracting up and then fail. Which is done here, is pushed down, expecting sort of that similar type of price action roll over. And this is what I like. There's been quite a few days of just doing nothing. It's just holding those lows. Anyone that's stepping in and buy it could easily get flushed out. But unlike this zone just in here, wasn't too many days before it broke up, and then you started contracting higher, major pullback, contracting, taking out this high. Problem is there hasn't been a big, any good setup to enter short here. What I'm sort of hoping for is more of this type of price action. We've had a good push down. It's trying to consolidate. It's not. So anyone that's that trend down is still quite strong. We're in a good level on the stochastics. We could easily just roll over, go and oversold, push right through those lows. So if this is a washout, and so anyone that's sort of viewing that as a washout and started to buy it in here, as soon as we get through there, they're probably going to adjust their view and think they're wrong. Okay, the art of good question, Clement. I've been a bit of a rundown. I've been trading for a long time. Been in the market since about 2000. I guess it's compared to some, it's not that long. But I've worked in the markets, I think, as a broker for about 10 years, and then I started trading my own funds. And my mentor essentially was Davin Clark. And I think the reason why I like Davin, and he can explain things clearly, and probably to my level anyway, to the way I understand things. He suits me well anyway. And the way looking at things, it's more, I found, looking at all the different, obviously done a lot of research, looking at a lot of things, read a lot of books just on technical analysis, but what it's come down to for me is the psychology behind levels, not so much, MA crossover or all these sorts of tools. That you can use them, and I have a specific way I like using this now. The stochastics, I went from stochastics and then sort of gave it up for a while, looking at MACDs, all sorts of things. And now, as I've adjusted my style of looking at things, and things start working for me over the years, have started working better, then I've come back to stochastics and just viewing it differently. Strength of moves and moves up or down. And that's what I like using the stochastic for, and that's sort of, and just my MAs to get an idea of the trend. But ultimately, to me, what I've come down to is just price structure, and I've learned that works well for me. Paul, so you need to short sell using CFDs. Okay. So CFDs, if you don't know a lot about it, it's obviously just, we know that it's based on stocks. Traditional way of trading is just buying and holding with stocks. You don't like it, you get out. So obviously CFDs come on board where it's just really, I don't know the pure history of it, but I think they've more come on board because longer funds or bigger funds or whoever have held these stocks for a long time, and they want to, they're sitting there doing nothing while they're waiting for it to work out potentially. So they've decided to get them as produce a product called CFDs and loan the stock out to short and earn an interest on it, earn something for their money while they're sitting there doing nothing, because their view might be on the monthly, yearly basis. So if it is going down in the short term, let's earn some money from it. I don't know if that's how they come about. That's what it looks like. So they started lending out the major stocks to short. Whether that's probably led to them holding other stocks, lending, so that the list of shortable stocks got bigger. Now, when you go to short, if things are all hitting the proverbials hitting the fan, sometimes it can be hard to get stock to short, because the provider's got to borrow it essentially or get it from somewhere, and you can't just enter the market and sell stock, off the bat. So you've got to be able to borrow it somewhere. So you know that if you can't get a shortable CFD, that means there's some heavy shorts in there. Shorts are built up, and there's some, people are guessing that there's some downside moves coming. But essentially, it's exactly the same, but in reverse. As buying a stock, you buy it, expect it to go up. You put your stop below your entry, away you go. The same thing, one CFD equals one share, except you pay a certain amount to borrow it. At just a margin. It's like an insurance premium. I guess you just pay, to have your insurance premium, you pay a certain amount of premium. Obviously, you don't get that back with insurance, but as margin, you do get it back. So if you've got an underlying $10,000 position in stock, the equivalent's $10,000 worth of CFDs. If that's the share price is $1, you buy 10,000 in stock, so you've got 10,000 outlay. Same in CFDs. Dollar stock, you buy 10,000, you've got outlay of $10,000, except you might pay 10%, just $1,000 to hold that position long. And it's exactly the reverse in short for shorting. And obviously there's an interest charge to hold, and interest, you receive interest to sell. So that's just a way, if you've got some positions you don't want to get out of longer term, then you can have a look at shorting some CFDs, using CFDs anyway. Yep, definitely, Paul. No, this is the thing. I think the thing about using CFDs is I don't find it sophisticated. It's sometimes it's hard to get people to get. When I first started trading futures, it's hard to get your head around how you could sell something and then buy it back cheaper to make money. Um, yeah, it's good info on how to use CFDs, but I think it's a good tool to use. You just got to have your entries, exits all marked up, what you're targeting, and then go for it. I guess using a put option is different. Um, it is an easier longer term option to trade using, well, buying calls and buying puts to directional trading, because you're limited in what you can lose. And I do like those two, but more of a longer term play. So yeah, leveraging. It's obviously high risk. You just got to remember that. Um, Once you've got your stops in place, as long as you don't muck in, this is where people get themselves caught. They got $1,000 in their account. They go, I can buy $10,000 worth of stock. They go and buy it. They got no room to move, no wiggle room, so they don't realise that 1,000 can get hit real quick. All right, any more? Anything else anyone wants to just go over? A stock that they just want to have a quick look at? Just check the emails. Let's just take a quick look again at the market and see what it's doing. Up 41, so it's kicked on a bit. At WBC, you can see it's approaching that level there at 31. So that's looking good. So you can see how as soon as we start getting a break out of that, you might see a few shorts getting washed out of the market. So I'd like to see that, and this overall nice supportive structure for a move higher. We've got BWX, which is, yeah, don't like that now. It's not looking the best. It's back down to where we got in. It's come up to resistance at 527. This level in here. Let's get to a better chart actually. So we've come up to that resistance level of this high just in here. Really struggled once we got up there. Really, ground our way high. It was really tough price action getting up there, and we look like we're backing off there. So we won't have to reassess that in a minute soon. But then again, it could easily just pull back and hold that $5 level, build that high low, and then go. Because sort of coming back and to retest all these breakout levels. So still structure's holding, but there's just that type of price action I'm not too fond of. What else we got? SXY is a nice little alert. It's still pretty much where we got in. It's had that kick up, got us in, kicked up, went alright, took out a few highs, it's pulled back. So we could be on the verge of building that higher low in here and then pushing back up through 30, but we'll see how that goes. ALQ. Okay, sorry, I just noticed it then. We'll have a look at ALQ then. There's another one, I think. Oh, that's. Oh, Sharon, yep, you said. Alright, we'll have a look at ALQ. So just checking a few different things we're looking at. ALS Limited. Okay, there's not much there you can see just quickly on the daily basis that's before we get into the weekly, it's had a good leg up from $3 to 6. Gained quite well. And it's done it nicely too. Except you get these. It's a bit gappy by the looks of it. I don't know what news has sort of caused it to gap down. It's consolidated, held those, built a, took out those highs, filled the gap, pulled back, built a high low. That's a good sign. So somewhere in there would have been nice, but it's rolled over quite hard too. So it's a bit whippy, a bit choppy. But really that longer term trend is up. So this is probably one you'd want to be looking more at a weekly chart. All right, let's draw this up here. You can see I think potentially it's coming off a weekly level. It's not looking too bad. It's some early signs. For me, it's probably a bit late from a daily to enter. I like to enter off obviously the dailies, but we'll draw that up, just have a quick look at some price action there. Sorry if you can hear anything there. It's just kids in the background there, being a bit noisy. Let's take a look at that. Alright, so first thing just to notice is that we're up in getting overbought, and we're really just bouncing. So you can see this good strong, we keep going from overbought to oversold. As we push down to lower lows, pull back up, so that contraction back up, it's not too strong, back into overbought. And then when you come back down to oversold levels down here, it's quite a good move down. If we've got everything set up. So first thing to notice is that sort of trend, what's happening there. It's definitely broken on the weekly basis. I don't know what other level, $3 with that's a major level. It's touched off there, so it's going to provide some sort of support if we do roll over and head back down. We're coming up into a level there. We've just obviously pushed through, which is not bad. It's not a convincing push through, obviously, but it's probably more because we're so close to retesting that breakout where we broke down from. And that was quite a good level. Had that push down, rejection off that level. Lower highs into it, pushed back down. We tried to reject it again, wasn't as strong. So you can see the sellers are, buyers stepping there quite strong. They're not as strong here with that tighter price action. We did get a push up, but it's really still building a major lower high. And then we had a breakdown from that zone. So the fact that we've taken out this high and it's so close to that breakout zone, it's a good place for the market just to wash out potential shorts who are starting to step in, expecting this level to hold just above 6 and just pop up here. We could just roll over from there. We don't know what's going to happen, but the price action there for potential a leg up to retest some of these, you got some major levels, miles away, but if they're going up to test these type of levels, obviously there's a bit more price action which I want to see first, and we'll go to the daily for that. But you've got, if you can keep your wrist tight, you've got some good levels, you've got some good fat in that trade. But really, this is the type of the leg with no correction. It's just been banging up high lows, stepping its way up. I don't want to be trading it potentially, because if we're getting up in a resistance zone, it hasn't corrected. You want to see some sort of correction, build a major. So if we look around and say it's $4, okay, that it's not a key level, but if we mark it up on a daily basis, we'll just quickly go to the daily and just remembering these levels. Oh, we're going to see it anyway. So $4, if we can get this price section here. So that's the move up on the daily basis, and we're getting up into a bit of resistance, remember there, and we've got another one somewhere up at, say, we're starting to get into as well. So you're taking a note, that's had a good move up from that level. $4, I think it was, $4 was, it's not a key level as such where we're going to see some washout, but if we see this major level correct and we get, if I can draw it up, say from these highs up here, we get a bit of action like this, lower highs building and move lower. Another lower high building, lower low. That could be a potentially nice little target. I mean, you've also got this zone here, $5, where it could just pull up to, and then start getting deeper correction on the retracements and building that high low in here. That's what we want to see. If it's around this zone in here, we can just draw that up. If it's around off that low, off there, that's potentially the way that we want to build a trade. In that respect, you're probably getting this the stochastics are what I look at. You're probably getting towards oversold, or you're getting a decent correction in there, and then starting to get this type of price action before. And that to me would be a better sign that this weekly trend's holding, because at the moment, on a weekly basis, we just want to see a major higher low, because we just had this leg up with no pullback really. I mean, in saying all that, it could easily keep going, and that's something personally I'm happy to risk, because I can go and look at something else. I don't care. But just the picture for this is what I'd like to see. We've got a key level. We had no pullback. It's got to be a hell of a strong market, which that doesn't quite look like. This type of price action is not a strong market for me, to just blow through it and just keep going. And if you do blow through it, then you could easily, sooner or later, just want to buy off a pullback. We could blow through it, pull back, retest this zone in here, and get that consolidation, and then look for, expansion from contraction. Market to contract a bit, and then look for that area to buy into the expansion. Yeah, hope that helps. Yeah, that's I'd potentially just be looking for a bit of a rollover, a bit of a correction, find some consolidation where you just get this type of price action, buying potentially off a higher low, preempting that breakout, and that the next, one leg up. If we have a good, that is a major. Well, that's not what I want to do. Let's just delete that and get back onto our other little drawing. So just take into account, if that's a major leg up here, we want to see, oh, that's not going to work, is it? So that yellow line there, if we get the major leg up, coming to resistance, we want a deep correction for that next leg up, okay, which could take us, if we're correcting off here or here, it could take us right up, oh, who knows, 750 thereabouts, something like that. Then we've got a big move up to potentially trade. All right, it's yeah, no, I agree with you there, Sharon. What level did you get into on that one? Roughly where? Just an idea. And what risk do you have on it? If you're up on that, great. It's fantastic. It's nothing better than being up on a trade, just trying to, rather than planning from when you're behind. So you can hear my squeaky chair there. Just quickly go over. So we've spoken about EMEC. We like that. Qantas, another one. We're sort of still looking for that to roll back up and take out these highs. Price structure's looking good. 6. No, look, yeah. If you're going to keep your risk tight, you can just keep it under these sorts of levels, and then you're not risking too much. But you are in that zone where it could easily. Don't forget, I'd like to see, if you see a washout, push up, yeah, good move. No, that's nice, Sharon. 590. No, I think that's a good area, considering that leg up there. We'll just see how that plays out. But it could easily, the fact that you've taken out there could bring a few buyers, and then we could pull short of that level up towards 660. But then again, you may not. The fact that you're in and you're giving it a go, the trend is up for sure. This leg up is still hasn't broken. So after everything I said, it could just keep going, which would be nice for you. All right. I guess there's not much else to go through. Where market's still up around that 40 mark. I think we've hit a resistance zone pretty much. Let's just quickly look at this. Yeah, see that big move up through there, that big washout. Now that, just looking at that right there, obviously anyone would think that leg to continue through is going to be extended, but guarantee you there's always people happy to buy it up there. Don't know why, don't know where they would. You can't buy it up there on a breakout and place your stop in here, just below 50. A 10-point stop. I think just as a quick point, I used to do it, we'll buy here with a 10-point. There's always a 10-point stop. There's always this, especially on futures. Now, half the time that 10-point stop still held me within a zone, and the market could easily come down, get me, nab me out, kick me out of the trade, still hold the trend, still hold the price structure and everything, and then go again without me. And so, in essence, your analysis is right, but you just put in your stop placement is completely wrong. So just that idea of having, I just want a 5-point stop or a 10-point stop, and just don't care where you place your stops. Placing those stops are sometimes more important than where you're getting in. And so what I look at now, if I'm trading the SPY, for instance, the futures, or really anything, if I'm trading this here, if I have a break up through that 54.25, I thought it was a key level, I have to go below this level. I can't just have a 10-point stop. I'd have to go below 54.08. So if I'm trading it from that half an hour chart, um, I just got to understand that, yeah, you got to remember that it's a 25, what was it, 15, 17, say a 20-point stop on that. Is that too much for your risk? If it's too much, don't trade. Simple. Or you just flick down to your key, your lower time frame charts, just to get, maybe you can hone in on that risk, where to place your risk. But Judy, I think your stop placement is really important, and that's what I think over the years we've just started trying to trade from my stop. Okay, that's where I would ideally like to place it, below that high low. Now, can I get in if the market pushes higher and still hold that my risk at the point that I'm happy with, or is it a bit too much risk involved in that trade? Okay, I have to wait for a pullback and then try to get in. Just that type of idea, but you're always looking for where you can place your stop rather than where to get in is the most important rule. So, a bit, I guess, reverse psychology, but it can help. All right, look, guys, we'll have to call it a day there. But yeah, thanks very much for joining us. And again, we'll be continuous again tomorrow and the next day. So we're trying to go in around that 10:15 to 10:20 mark each day, just after the open, and go through a few things, look at some charts. Yeah, just try to analyze it. I mean, if you don't agree with what I'm saying, I'm more than happy to to discuss it. I always like hearing someone else's view on what they're looking for and what they're looking at. It's always good. It helps me too. So yeah, any charts you can feel free to send them through overnight if you want to mark something up and just say this is what I'm looking at. What's your view on this? Where would I get in? Even yeah, so mark it up and send it through to support at tradesetup.com.au, or just wait and put it in the chat and we'll have a look at it in the chat, just with a couple of levels. Yeah, thanks again for joining us, and we'll speak to you again tomorrow. Thanks, guys. Bye bye.